Good morning, everyone, and thank you for choosing Financial Insights today. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial News, June 31, 2023. Asian equity futures are pointing to gains across the region as markets open on Monday, following a rally on Wall Street. Investors have brushed off concerns over the Bank of Japan's policy tweak and are embracing the latest U.S. economic data. Contracts for Japan and Hong Kong rose at least 1%, while those for Australia edged up 0.3%. In the U.S., megacaps led gains on Friday, with the Nasdaq 100 climbing almost 2% and the S&P 500 advancing 1%. Notably, Meta Platforms Incorporated and Tesla Incorporated each climbed more than 4%, and Intel Corporation rallied about 6.5% on a bullish sales forecast. Additionally, bond yields fell. Key gauges of inflation have shown further easing, which has contributed to a more optimistic outlook for the U.S. economy. Investors believe that the economy is now finding a balance, neither running too hot nor too cold, which may result in a soft landing. The dollar opened slightly lower against most Group of 10 peers on Monday, while the yen rose marginally after snapping a four-day rally on Friday when the Bank of Japan adjusted its policy to give bond yields more room to rise. Currency and bond markets are facing the risk of continued volatility as investors assess whether the recent rate hikes from the Federal Reserve and European Central Bank signal the end of their tightening cycles. The Australian dollar and British pound are also in the spotlight as their central banks are slated to meet on Tuesday and Thursday, respectively. On Monday, the focus will be on manufacturing and non-manufacturing PMI data from China. Economists are projecting more weakness in factory activity. There were further government efforts to bolster the Chinese economy, including a plan to boost consumer industries and support small firms' access to funds. In Japan, investors will be closely watching industrial production and retail sales figures for clues on the nation's economic health and its impact on inflation. The Bank of Japan's announcement on Friday to offer to purchase 10-year Japanese government bonds at 1% indicates a loosening of its yield curve control. This move expands its tolerance range for 10-year JGB yields by a further 50 basis points. Analysts speculate that the bank might be preparing to tighten monetary policy and eventually remove yield curve control, which could have implications for a wide range of global assets and markets heavily exposed to Japanese money. In the U.S., stocks rose on Friday, resulting in all major indexes ending the week on a positive note, supported by positive economic data. However, in Europe, the Pan-European Stoxx 600 index fell 0.2%. Germany's gross domestic product stagnated in the second quarter, while France's GDP grew by 0.5%, surpassing the expected 0.1% growth. Alphabet shares surged 10% last week, hitting $132.58, the highest level in over a year. Investors are bullish on the stock after Alphabet reported better than expected earnings for the second quarter. The report shows that Google, despite facing challenges from generative artificial intelligence chatbots, continues to lead the search business. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. In India, the benchmark stock indices ended with little change after falling during the day, with the IT and private banking sectors declining while real estate, metals, and media shares gained. Overseas investors in Indian equities were net sellers for the second consecutive day. The Indian rupee weakened against the US dollar, closing at 82 rupees and 26 paise on Friday. Markets started the last trading day of July on a relatively quiet note. The US dollar index managed to consolidate the gains it made last week, holding steady above 101.50. Meanwhile, US stock index futures remained flat, following the risk rally observed on Friday. Investors are closely watching the upcoming Gross Domestic Product and Harmonized Index of Consumer Price (HICP) data from the Euro area. These figures will play a crucial role in determining whether the European Central Bank will pause its tightening cycle in September. ECB President Christine Lagarde, in an interview with French daily Le Figaro over the weekend, indicated that the Eurozone economy was expected to expand by 0.9% in 2023. The Eurozone GDP is projected to grow by 0.2% in Q2, rebounding from the 0.1% contraction recorded in Q1. Euro to US dollar experienced a rebound and managed to stabilize above 1.1000 on Friday. However, by the end of the week, the pair closed in negative territory. Currently, Euro to US dollar remains steady early Monday. Analysts predict that the HICP in the Euro area will rise 5.3% year-on-year in July, slightly down from 5.5% in June. Pound sterling to US dollar is fluctuating in a tight channel above 1.2850 early Monday. Later in the European session, the UK will release consumer credit change data for June. Investors are also eagerly awaiting the Bank of England's monetary policy decisions, which are due to be announced later in the week. Following the Bank of Japan's surprising decision to introduce flexibility into the yield curve control (YCC) strategy, US dollar to Japanese yen gathered bullish momentum early Monday. At the time of press, the pair was trading at its highest level in 3 weeks, standing above 142.00. Gold experienced a surge in bullish momentum and recorded strong daily gains on Friday. However, gold ounce per US dollar is finding it challenging to preserve its momentum early Monday, trading slightly above $1,950. The benchmark 10-year US Treasury bond yield has been edging higher toward 4%, potentially impacting gold's performance. In the cryptocurrency market, Bitcoin continues to move within a very narrow range, hovering around $29,500 on Monday. On the other hand, Ethereum remains flat, trading slightly below $1,900. As the trading day unfolds, investors will keep a close eye on developments in international markets, considering the potential impacts on currencies, commodities, and cryptocurrencies. Stay tuned for further updates as the financial landscape evolves. Key events this week: China manufacturing and non-manufacturing PMI, Monday. Japan industrial production, retail sales, Monday. Australia RBA rate decision, Tuesday. Eurozone S&P Global Eurozone manufacturing PMI, unemployment, Tuesday. UK S&P Global/SIPS UK manufacturing PMI, Tuesday. US construction spending, ISM manufacturing, job openings, light vehicle sales, Tuesday. China Caixin Services PMI, Thursday. Eurozone S&P Global Eurozone Services PMI, PPI, Thursday. UK BOE rate decision, Thursday. US initial jobless claims, productivity, factory orders, ISM services, Thursday. Eurozone retail sales, Friday. US unemployment rate, non-farm payrolls, Friday. Some of the main moves in markets. Stocks. S&P 500 futures rose 0.1% as of 7:02 a.m. Tokyo time. The S&P 500 rose 1% Friday. Nasdaq 100 futures rose 0.1%. The Nasdaq 100 rose 1.8%. Nikkei 225 futures rose 1.4%. Australia's S&P/ASX 200 index futures rose 0.3%. Hang Seng index futures rose 1%. Currencies. The euro was little changed at $1.1022. The Japanese yen was little changed at 141.10 per dollar. The offshore yuan was little changed at 7.1557 per dollar. The Australian dollar was little changed at $0.6654. Cryptocurrencies. Bitcoin fell 0.2% to $29,202.50. Ether fell 0.3% to $1,860.62. Bonds. The yield on 10-year Treasuries declined 5 basis points to 3.95% Friday. Commodities. West Texas Intermediate crude was little changed. In conclusion, we'd like to thank you for watching Financial Insights today. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.